Without any further ado, guys, we'll go ahead and start this presentation of our weekly episode. Today, we're going to talk about business owner solutions, buy sells, key man, cross key man, corporate owned life insurance, and how it can be used for either continuity or liquidity strategies. Moving forward, we'll do a little message from our sponsors here. The Penny A Team, we are your insurance's elite operations team that handles the full workload that typically slows life insurance production down. And the reason why we built the Penny A Team, life insurance opportunities rarely disappear because clients lack interest or because solutions aren't appropriate. More often, strong cases slow down or fall apart due to the operational demands required to move them from conversation to placement. Gathering client information, completing applications, managing requirements, coordinating underwriting, and maintaining follow up can quickly become overwhelming. Even highly successful producers often find themselves pulled away from the revenue generating activities just to keep cases moving forward. When follow up becomes inconsistent or timelines stretch too long, momentum can fade. Clients become distracted, decisions are delayed, and opportunities that should have resulted in placed business are lost due to the process rather than the strategy. The solution is the Penny A Team. Penny A Team is a dedicated group of specialists designed to function as an operational extension of your practice. Once you identify an opportunity and make a warm introduction, the A Team helps manage the implementation process from start to finish. This includes guiding the client through the application process, coordinating underwriting, and supporting the path to policy approval and delivery. And how we support your business is we will assist with and help lead client conversations when needed to ensure clarity and professionalism, manage application completion and document requirements to reduce administrative burden, coordinate with carriers and underwriting teams through an experienced case management group with 45 plus years of combined experience. We'll track requirements, monitor progress, and maintain consistent communication throughout the underwriting process. Proactively follow up to keep any cases moving forward towards approval and placement. What this means to you, you'll spend less time managing paperwork, requirements, and carrier communication, and be able to stay focused on the highest value activities, building relationships, advising clients, and identifying new opportunities. You'll maintain full ownership of the client relationship while the operational team works behind the scenes on your behalf. We'll improve case momentum, placement rate, overall client experience, and help you scale production without hiring additional internal staff or increasing your operational complexity. The goal is to help agents place more business, create a smoother experience for clients, and enable advisors to scale their practice efficiently and sustainably. So moving forward, so here's a couple testimonials of some people we've talked to, Christopher Thaw, as well as one of our colleagues over there at Endzone, Cyrus. Great guy. He runs an internal podcast for Endzone agents. You should check it out if you get the ability to do so. Great guy. So I will read a brief disclosure. This material is provided for educational and informational purposes only and is not intended as and should not be relied upon as tax, legal, or financial advice. You should consult with your qualified tax advisor, attorney, or financial professional regarding your specific situation before making any decisions. The strategies discussed may not be suitable for everyone and are subject to change based on laws, regulations, and individual circumstances. So, guys, basically what we want to talk to you about is a lot of you who are in the P&C world and some also in the life and health world, you might be sitting on large cases and not even know it, especially if you're providing coverage for PP&E, it's property, plant, equipment, businesses, large real estate. You probably have clients that either have a business that needs a succession plan or have a legacy to leave. When these business owners are partnered up, sometimes what can happen is if one or the other partner passes away or gets sick or something happens to them, they're often left dealing with the heir, their other partner's heirs or family. So What you want to do is cross insure against that and make sure that you have a business continuity plan in case, a viable partner or a key person kind of gets taken out of the game. So, why business owners? Multiple risks, larger coverage, and some of this could be, just partner loss or key man loss, but there is a multitude of both business and systematic risk that business owners face every day, whether they know it or not. Ownership and continuity exposure, making sure that business can outlive, more than if one of the partners passes away. Let's say you have a partnership with four or three or even two people. What happens to that business if one of the key members of it passes away? Well, it leaves the other partner kind of holding the bag to figure out a plan to keep going. Multi-policy design opportunities. In this specifically, we'll probably talk about cross-sell, key man, where two partners are insured against each other, and it gives you a higher lifetime client value. So if you have a great client, have a great relationship with them, maybe you're doing business with them 5 or 10 years, maybe they're doing their P&C through you. If you can get in there and also provide key man or corporate-owned life insurance, it will deepen and widen that relationship to a point to where they probably will not go and shop somewhere else to review coverage for P&C or individual life or any of the other things. You want multiple business platforms in which you're serving your clients. It creates for a better, deeper relationship. So the real risks that could devastate your business in an instant. It's going to be a key person suddenly passes away, a partner is unexpectedly disabled, a top employee leaves or dies, or you have a massive wave of either business or systematic risk that causes revenue drops overnight. Without a buy-sell plan, you could have ownership disputes, especially in probate. If the family has, a legacy to the former owner, and they have to deal with, buying out a family's equity or buying out an heir or a spouse's equity or having to take on a spouse as a partner, sometimes that can destroy the continuity and the spirit in which the business was actually created in the first place. It can also create opportunities or create scenarios where there's forced liquidation due to probate orders or just to buy that family member out. Could have a family versus partner conflict. And during that period where the business is in flux, it will often cause the business valuation to decrease. So it can be a business value destroyer, and that's something that we want to avoid. So, buy-sell solutions, a funded plan that ensures a smooth transfer of business ownership. Typically, what it does is we're going to predetermine ownership transfer. Avoid probate, avoid any nasty court costs, avoid anything else like that. Make it super simple. Provide liquidity at death or exit and protects the business continuity. Funded usually with life insurance, usually going to be a permanent policy. You can also do a straight term policy that would cover the buyout. However, a lot of people like to use a permanent policy because you can show it on the books as an asset to the business, which often, if you're pre-sale or looking to be bought out, you might be able to get a higher valuation. Moving on, the buy-sell structure, cross purchase versus entity. So cross purchase would be if two partners, let's say Bob and Bill, have a business together. Bob will get a policy on Bill. Bill will get a policy on Bob. If either one of them gets taken out of the game, it provides the liquidity for them to solve any business problems and be able to pay out maybe an heir or a family member, and provides liquidity at a point where the business needs it most to achieve continuity. These policies are tied to ownership percentage usually. If you have 50% owners, they're going to essentially cover for the amount that would buy out the other partner, maybe a little bit more too. Valuation is usually aligned to the business, and the insurable interest is within the business. And they are funded over time, usually by premiums that are, on term, they'd be level monthly or quarterly premiums. on a permanent policy. It could be, any one of the three combinations, either monthly, quarterly, or annually. And in the case of entity would be when the corporation owns a policy, more often used for key man. What it can be done, you even have it owns it outright and would insure itself against the loss of a key employee, or it could be used as a supplemental employee benefit plan in which after 15 or 10 or 5 or whatever predetermined period of time for loyalty of service, they could gift that policy to the employee for their many years of loyalty. And there's also another one where they could also do what's called a split dollar arrangement, where maybe the employee kicks in 50% of the premium, the business kicks in 50% of the premium. So there's multiple ways to structure this. As far as buy-sell planning, a proactive strategy to protect your business, your legacy, and your stakeholders. Once again, we said kind of ad nauseum, it creates liquidity at a death or exit, ensures that ownership continuity, requires a funded agreement, and it drives larger face amounts. So if you're looking to get into a position to write big life insurance cases, this is a great market niche to be in, because it's going to give you an opportunity to set a lot of those death benefits off of not just the human life value of the employee, but also off of the valuation of the business that they own. So, case expansion opportunities, multiple owners, multiple policies. So if you pick up a small to medium-sized business that maybe has 4 or 5 partners, usually with a cross-sell, you are going to write a policy on at least each and every one of those partners for the value of their share as it's evaluated in the business. Higher valuations mean a higher face amount. So you got a restaurant that maybe grosses 1.8 million in any given year. You would probably write it for about 2 million. If you have a large or medium-sized operation that does +5, +10 million, you would insure up to 5 or 10 million, usually leading and driving larger premiums. And if they choose to go permanent on that, it can give you an opportunity to sell a very big face amount policy, but also they can hold it as an asset on their balance sheet. It's typically going to be layered in with key person, and then often these people, as let's say, if you're working on a corporate, employee benefit plan for like a small or medium-sized business, these people are often underinsured. So they're looking at their group life insurance coverage and think, well, that'll get me through that. Maybe that's enough. The premiums are cheap. Usually it's never enough. It's not going to be a multiplier times 5 or 7 or what they would need to support their family in their absence. This will come in and help boost that benefit plan as well. So, specifically in key person strategy, we're looking to protect the people who drive revenue, not just ownership. What we want to do is we want to make sure that if a key person passes away or gets sick or has to leave, we have 2 opportunities to create some value there. One of them is in the form of a supplemental employee benefit plan where they can be gifted that policy over a term of years, as they show themselves to be loyal and key employees over 5, 10, 12-year period, whatever contract you set. But it also provides liquidity and business capital to replace lost talent and train new talent to come in and be able to fulfill the duties that were left by the decedent. It covers the financial impact of losing that key talent. It will replace funds and give you a transition period and some stability in a quarter in which you're probably losing revenue with your key person out. And it layers on top of a buy-sell for full protection. And once again, as long as it's corporate owned, it can be added on the balance sheet as an asset. So, the key person risk and what we're trying to cover with this, the hidden exposure, any revenue that's tied to one person or talent relationships that are tied to that one person. You got a key producer that passes away. Often you can be at risk to lose a lot of their client relationships. They like working with their guy. You might have to have a pretty big injection of liquidity to make up for the lost revenue in that case. And it also will provide you with enough capital and some business continuity so that you can make the right decisions, training the right person to replace them. Often it's hard to find good help. You're going to need to have the payroll dollars to hire that kind of talent, but also the budget dollars to spend the time out of your business to train that talent to come in and fulfill those duties. So, Key Person Solution provides stability, an immediate capital infusion when the business needs it most. It can cover lost revenue for a period of term while you find a replacement and come up with a continuity plan. It can also replace the funds that you would typically pay out on payroll so that you can hire new people. And it will stabilize your business operations through possibly one of the biggest crises that your business could see. So a layering strategy. Let's say we have buy, sell, ownership protection. And then you also have key man, business protection. The key man, typically an owner wants to have key man because it provides what we call the golden handcuffs. It keeps good employees where they're at because they know that they have a separate benefits package that probably will not be offered to them outside of that organization. And it's usually for small and medium-sized businesses. Typically, when you see large cap or mid cap companies, they're probably going to be doing equity compensation, so they don't really use this as much. But for small and medium businesses, it is crucial. If you put both of these things together, you have a full coverage strategy to where you can put in the building blocks to rebuild the business and have the time to do so without too much lost revenue. So, positioning that framework. We lead with risk exposure. We're talking to the business owners. A lot of them, they've been in business long enough. They know what their business risk is. They know what their systematic risk is. If you can speak to that articulately, you're going to be able to do a great job in positioning yourself as a trusted advisor and building them a business continuity plan. You want to ask business questions and ask them, hey, look, let's say you're a grain operation, you have large, heavy equipment. If the owner dies, that equipment needs to probably get paid off. Or we need to be able to find another way to inject some liquidity to keep operations going, or to even cover what your shipment futures would be. These are things that would be the prerequisites to determining what level of coverage they need. So tie into continuity and the value, and then introduce the structure of either key man or a buy sell or just straight corporate owned life insurance. So what this leads to, once we kind of spoke on this before, but it's going to lead to larger face amount opportunities where you can write larger cases, more leveraged and more valued relationships, multiple policies per client, stronger retention. When a business usually owns these as far as a benefit plan, it's paid through the business operations. If John or Clark or Jim, maybe they're strapped for a little bit, they might miss a premium or two, but usually businesses are not. They're not going to miss their employee benefits. It's also going to give you a higher long-term production because renewals and also referrals from this is going to put you into a niche where you're constantly writing larger premium cases. So, conversation starters. What happens if one of the owners doesn't come back? How would the business handle that financially if one of the partners passed away or lost a key person? And is there a plan already in place? What are you doing to address these potential scenarios? If they don't have a plan, it is a perfect segue to get in there and talk about this and provide some value to your client. So, real opportunities. Any existing small or medium-sized business uh, that has owners and considerable clients that need to be serviced, any underdeveloped conversations, any misproduction protection gaps, any untapped multi-policy cases. All of these are you leaving pennies and dollars on the table. And when we talk about COLI or key man or buy sell agreements, we're talking about an amount of premium that could essentially be life changing to a young producer. So you're looking at 100,000 or 150,000 a year in premium getting paid to protect a business. If that will change your lunch plans, over the next 2 weeks, getting a case like that run in, I would definitely recommending this to your clients. So this is something that we use to grow our book and deepen our relationships. You want to start with your current clients, or business owners that have protection gaps or needs. It gives you an opportunity to expand that conversation and talk about not only what their business needs, but maybe even later down the line about what household needs there are as well. It also, if you're talking to businesses and the business owns their building or their real estate, which they operate out of, it is an opportunity to get another PNC case or vice versa. It is a great opportunity to build large cases and to offer a type of value that is a little bit undersold in our market. So, giving you a case example, let's say we have a buy sell. We got two partners. They're both essentially have 2 million in valuation they need to cover for their ownership in the business. Run a key person, maybe for one key person that is integral to the business continuity and integral to revenue generating possibilities. That allows you to write up to 5 million in death benefit. Well, both of these two are essentially going to be able to insure against themselves, and then they're both insured against the key person if they pass away or leave. It also, once again, ad nauseum, we talked about having a supplemental employee retirement plan or benefit plan in the form of a permanent insurance policy often will keep your key person there working and showing some loyalty throughout the years. Maybe they love their job, maybe they have other opportunities, but it's harder to leave a job when they know they're going to be gifted a $1 million policy at some point that they can use the cash value to supplement either family needs or their retirement. It's just an added benefit. We kind of call that the golden handcuffs, if you will. So, case example 2. I have a business owner. He just wanted to have a personal policy. You talk to him about his individual life policy, what he needed to protect his family. Maybe expand the conversation and identified some business exposure. Add key person, just turned a life case into maybe a $1 million life case over to a $3 million opportunity by adding another $2 million in key person insurance. So it's a pretty easy cross sell as long as they are a business owner and have overhead. One thing we'll kind of go over, Penny, we're building out these pillars. We do long-term disability, short-term disability, annuities, life insurance, health insurance, retirement solutions, group and personal and commercial lines. And we really take a lot of referrals and love to work with our commercial lines people. Our P&C people the relationships that we've seen there are absolutely our bread and butter, and we're grateful for them. So if you're in the P&C world, we would love to talk to you. So how Penny supports these conversations. Advanced markets guidance. I am your advanced case design specialist. I will personally help you close these cases, and I will get on those calls with you as you speak to your client, keeping you in the process from A to Z. We also have the Penny A team that's going to help with the case design support. They'll be backing me up. I'll help design the case, and they will help process it. We'll also find the best carriers that have strategy alignment that are going to be useful for your needs. Let's say, we have somebody that's super preferred, no health issues, but they have a massive equity valuation to cover in their business. Maybe it's Pac Life that does over 5 mil or 10 mil. That's going to be best for that. Maybe we have a 55-year-old smoker that owns, 2 grain operations and a couple oil wells. He's got to get insured, but it's kind of hard to get him a decent rating. Maybe we might look at, Protective or Banner or something else like that that is a little bit more favorable. We're going to help you come up with that carrier strategy so that you end up quoting the client at the best rate that you possibly can before before they pull the trigger and decide to do this. And we will be able to collaborate with you on that plan throughout the life of that policy. Guys, if you have any questions about COLI or advanced market case design, I implore you, feel free to take down my cell phone number. That is my personal cell phone number. Don't everybody call all at once. And that is my email, cking@pennyinsurance.com. We are standing by to help you close as much premium in all the cases that you can. There is no case too big or too small. Do not be afraid. If you have anything that's somewhat complex, wondering how you can kind of fulfill that need, we are happy to accommodate. That's what we're here for. And any of you that are colleagues in the P&C world over at InZone, we would relish the opportunity to talk to you for just 15 minutes, maybe get a calendar invite and, show you some ways that we can add some value to your practice. Guys, that's it. That is the presentation for today. I will have a little bit of time, maybe about 4 minutes, or make that 3 minutes. If anybody has some questions, as long as I'm not giving out any specific and individual financial advice, I am happy to field questions. If you need some more in-depth help on any of that or answers, I am happy to schedule some time on the side with you to where I can actually dedicate the time to talk to you personally.
Sure. So we have a few questions that came in. The first question is, if an agent wants to get started with this, what's the first step that they can take?
First step is identifying the business owners that are in your book. Second step is either having a life, health, and annuity license, or being able to refer it to your partners over here in Penny, and we'll help you either way. But the very first step is identifying those valuable business owners in your book of business.
And this actually leads into the second question. How can agents begin identifying opportunities immediately after this session?
One of the great ways that you can, and with P&C, you have a unique niche where they are already often writing coverage on property, plant, equipment for businesses. So if you have a corporate-owned building, or you have policies where a LLC or a corporation or an S corp, C corp, etc., partnership owns and pays the premiums, that's a great opportunity right there. If you are, reviewing your book and you see, large real estate portfolio that has some partners, or anything that's named with an LLC or a corporation on it, or a sole proprietorship, those are opportunities to talk about COLI, Key Man, and other business insurance.
And we have a comment that came in. Hi, I'm actively selling life and health, but I have my P&C lined, though I've never done anything with them. I'd like to explore opportunities.
Absolutely. When you go in there and talk to them about, COLI or a business policy, it's also going to allow you that opportunity to go in there and say, hey, look, who insures your building? Hey, I've had plenty of clients that I didn't even know exactly what their full overall range of assets were. Like I had been working with them as a financial advisor. To find out they own a restaurant, and that restaurant needs P&C coverage, fire coverage. It is just a great opportunity to add some more value and leverage to your relationship with them. And let me tell you, the first time a business goes down, or they have an issue with, where they have to make a P&C claim because a restaurant burns down, and you pay that claim, you will never, ever have to fight for credibility with them again. They'll be happy to do business with you because you kept your word, kept your promises, and took care of home and hearth for them.
And then this goes back to the previous question. Once identified, what should agents focus on to build confidence?
Really, the first thing you want to do is, you want to identify the needs, and the best way to do that is to go in there and just have a very organic conversation with the business owner. Every business owner wants to talk about their business and what they do. Ask them the specifics. Ask them how their business runs. What kind of margins do you see? What are you looking at? What is something that it would be absolutely great for your business? What could cause you problems? Is there anything that we can look at that might provide you more value in protecting your business? And within that, you're also protecting their family and their livelihoods. So it's really just have a one-on-one human conversation. If you need to get a list of questions, we're happy to kind of talk to you, engage you through that. Or even better, if you'd like, engage with us. We'll be happy to set up a Zoom meeting, or in some cases, we can even fly to wherever you are and talk to people about business risk exposure and systematic exposure with their small or family-owned business, and get them covered in a way that they kind of gives them a little bit more peace of mind. And we're happy to have those conversations all day long. If you want to refer, or you just want somebody to kind of hold your hand as you go through that process with your clients, that's what we're here for.
And that actually leads into this next question. I think I missed the part about the Penny A team, and I was wondering if you could go through that again. He said this during the presentation, and we have a few people that also asked about that. If you could go through that again briefly.
Sure. The Penny A team will help you with everything pretty much from A to Z. If you need to figure out what carriers to get appointed with, we have the Penny A team for that. If you need help filling out an application or getting in Firelight to fill out that application and just knowing, hey, what do I talk about on the suitability standard? We can help guide you through that process. We can take the referral, or we can just help you do it either way. And then we'll check on the case. We'll run it through underwriting, find the right carriers to put it with. And we have a great underwriting team here that will go through everything and knows what carriers for what risk factors. A lot of them are studied up on special, niches. I'll give you an example. There are some carriers that look at, kidney dysfunction more or less favorably. And there are certain that will not cover you, but others that will, that are not that terribly concerned about it. There are some that if a business owner has any cardiac risk and is taking the wrong kind of blood pressure medicine, it really doesn't work with that one carrier. But there are other carriers that are a lot less stringent on that. So it's kind of having that scenario and niche information and experience. That's what we're going to bring to the table to help you close cases. And it's over 45 years plus collectively with our guys here at Penny.
And we have one more question that came in. If one of the partners passed away, would their family rather receive cash or become part owners in the business?
And that's something that the business owners are going to determine before they even do this. A lot of these are also written with, a partnership agreement. Some families, especially after you just lost a spouse, they might not feel like running a business. They might have 3 kids and they're worried about, how do I keep a roof over my head? How do I protect my family? How do I feed these kids? The main breadwinner is gone. I just want to sell the equity shares that I have, get them bought out, and I want to restart my life and take care of my family. Others look at the business, maybe a father to a son or mother to a daughter. They might look at the business as a legacy, and they need the capital to say, hey, look, dad's gone, and I want to keep the name going on, and I want to keep protect the name and the trademark he spent his life to build. I'm going to need capital for this interim period. I want to make sure that I do a good job running this business, just like my dad or grandfather did. It really doesn't matter exactly what the scenario is. It can be molded to fit and shape into that scenario. COLI and buy sell can be structured hundreds of different ways if you want to really get into the nuances.
Oh, and we have another one that just came in. Is it recommended to get a buy-sell legal agreement written up by a lawyer prior to placing the life insurance policies?
I mean, technically, yes. If you are, let's say, most businesses already have articles of incorporation, or if there's a partnership, a general partnership or limited partnership, those duties are often outlined, and by either the exit or a buy-sell agreement would be an addendum on that paperwork. It is recommended. I would say that most people in business do draft contracts before they open up an LLC, and definitely before they do a C corp or an S corp. And then you almost always have articles of incorporation for an LLC. However, on key man, in some cases, I've seen small operations will buy key man, and it's maybe a ranching or a grain outfit. You got two good old boy guys. Their word is strong as oak. They keep their promises to each other, to each other's families, and I've seen it done on a handshake. Would I recommend it doing that way? No. I would recommend that you always talk to an attorney and have business documents drafted up the right way so that there are no tendencies for litigious little excursions if something goes wrong, or in the case of making sure that benefits or the liquidity is clearly outlined, who it's going to, who the recipient is, and how it would be used. It usually cuts down on large legal expenses later if you can do the front end work.
Cool. Those are all the questions. So thank you so much, Charles, and thanks everyone for joining. We will be providing a recording to everyone that registered, and be sure to check out our other webinars. This is actually part of our educational series, which is every Thursday at 12 p.m. PST. And this is where we cover a variety of topics for life insurance and PNC. So thanks again to everyone that was able to join us today, and we hope to see you next time. Take care, everyone.
Great afternoon, everybody. Thanks for joining.